War on Iran. Khamenei is dead. Oil could hit $150. Markets are collapsing. What happens next? Right now, the world economy is facing one of the greatest geopolitical shocks in decades. Iran's supreme leader, Ayatollah Ali Khamenei, has been killed in a joint US-Israeli military strike, and the retaliation has begun across the Middle East. This is not distant conflict anymore. This is not just headlines. This is oil disruption, stock market shock, inflation resurgence, and recession risk, all unfolding in real time. By the end of this video, you'll know how high oil could go, what markets are already pricing in, what happens to stocks, gold, and Bitcoin, how global recession risk spikes, and how you should strategically react, not panic. So, don't go anywhere. Let's break this down logically, factually, and without sensationalism, but with maximum clarity. What just happened? Here's the reality on the ground. On February 28, 2026, the United States and Israel launched intensive airstrikes on Iran in one of the largest escalations in Middle Eastern conflict in decades. Importantly, Iran's supreme leader, Ayatollah Ali Khamenei, who ruled the country since 1989, is now confirmed dead. That's historic on its own. But this blow also decapitated Iran's power structure and triggered a wave of violent retaliation targeting Israel, Gulf Arab states including UAE, Bahrain, and Kuwait, U.S. military positions in Iraq. Reports show missile and drone attacks across multiple countries in one broad sweep. This is not a limited skirmish. This is not contained. This is a regional conflagration. And the economic fallout is already spreading. Why this matters globally? Here's the truth. This conflict strikes at the heart of global energy security, because right now, nearly 20% of the world's oil supply moves through the Strait of Hormuz, a narrow choke point between Iran and Oman. That waterway is critical, not optional. And right now, major oil companies and trading firms are starting to halt shipments through the strait. Why? Because insurers and vessel owners don't want their ships hit by missiles or drones. That means oil isn't just at risk of price spikes. Oil is at risk of actual supply disruption. And as markets reopen this week, traders are pricing in oil hitting $80 or more imminently. Brent possibly reaching 100 plus with continued escalation. Triple-digit oil if shipping halts persist, or the strait is effectively closed. This matters because cost of gasoline goes up, transportation costs rise, consumer goods get more expensive, inflation rebounds, interest rates stay higher longer, corporate profit margins shrink. This isn't theoretical. This is economic shockwave territory. Oil markets break down. Let's be precise about oil. Before this conflict erupted, Brent crude was already near 6-month highs, rising due to geopolitical tensions even before the attack. Now, oil has begun climbing again. Forecasts show traders expecting further big moves higher. Risk premiums are building into prices. In simple terms, if the Strait of Hormuz becomes unsafe, oil spikes sharply. Historical context. In prior Gulf conflicts, such disruptions sent oil prices much higher. Analysts warn this could happen again. $80 to $100 is a realistic near-term target. $120 to $150 isn't out of the question. If shipping halts fully, prices could explode based on fear alone. Even if supply isn't physically cut, fear of cuts alone drives prices up. This has enormous knock-on effects. Airline fuel cost jumps. Manufacturing costs rise. Consumer goods get more expensive. Global inflation weighs on economies. And if inflation rises again, central banks could be forced to pause or reverse cuts they were considering. That means the markets change trajectory fast. Global stock markets. What's already happening? Let's look at where markets are right now. Following this escalation, regional stock markets plunged. Gulf markets were hit hard. And Borsa Kuwait suspended trading due to exceptional conditions. This is a key early signal. Investors don't like uncertainty. Equities tend to sell off, reduce risk exposure, move into safe havens. In fact, traders globally are already pricing in downward pressure on major U.S. indices, reduced confidence into industrial and travel sectors, a rotation toward defense, energy, and safe haven assets. In some markets, we're already seeing Dow futures react negatively. S&P 500 and Nasdaq volatility rising. Oil and defense sector strength emerging. Gold and treasuries moving higher. Markets hate uncertainty. And this kind of shock is pure uncertainty. Defense, gold, and safe havens. Now let's talk where money flows in times like this. When geopolitical risk rises, defense stocks jump, gold rises. Bitcoin shows mixed reactions. Risk on if inflation rises, but risk off at first. Defense and aerospace ETFs are already seeing increased interest from major institutional buyers. Gold, the traditional safe haven, is moving higher as risk appetite drops. Why? Because when global risk rises, investors want protection. Bonds aren't yielding much. Stocks are volatile. Gold retains real value. But here's the nuance. Gold can be volatile too, and sometimes drops short-term when markets panic. So it's not foolproof safe haven, it's risk management. Diversification matters more than ever. Bitcoin and crypto. Safe haven or speculative risk. Bitcoin and crypto behave differently. In early conflict shock, crypto often falls with risk assets. But if fiat instability rises, Bitcoin may recover. Some investors view Bitcoin as digital gold, not guaranteed, but meaningful in long cycles. Right now, crypto volatility spikes. Investors are cautious. Some are reallocating into Bitcoin as digital hedge. But remember, Bitcoin is still a risk asset in times of acute fear. So treat it strategically, not emotionally. Fed, inflation, and global economy. Now we bridge geopolitics to macro policy. If oil prices rise sharply again, inflation could reignite. Central banks may hesitate to cut interest rates. Real yields stay high. Growth slows. Economies are fragile. After years of stimulus cycles, every shock has amplified impact. Inflation pressures plus geopolitical risk equals a policy trap. Central banks hate that scenario. It forces them to choose between supporting growth, fighting inflation. It's a dilemma, and it creates volatility. This is why this matter goes way beyond energy markets. Recession risk and systemic impact. What if this crisis drags on? What if the conflict spreads? What if oil stays elevated? Then, consumer spending shrinks, purchasing power declines, business investment drops, global growth weakens. Recession risk climbs quickly when inflation doesn't fall. If central banks can't cut rates but prices keep rising, economies stall, and markets price that in fast. This conflict could accelerate that cycle, not create it, but significantly deepen it. Best case scenarios. Now here's the strategic real talk. Even in crisis, markets tend to overreact, then correct. History shows wars have spikes, then markets stabilize. Oil may overshoot, then cool. Safe havens retreat once clarity returns. If a diplomatic or de-escalation path is found, the initial risk premiums could reverse. This is why opportunity often follows crisis. Conclusion. What happens next? Here's the summary. Khamenei's death and Middle East escalation are real and confirmed. Oil prices are rising and likely to rise further. Regional markets are already sold off. Global equities face volatility. Defense stocks could outperform. Gold and safe havens could be supported. This is a real macro shock, not a drill. But it's also manageable if you understand what drives markets. Stay informed, not fearful. If you learn one thing today, it's this. Geopolitical risk matters, especially when it touches energy, global trade routes, leadership vacuums, military escalation, inflation dynamics. This isn't fear. This is awareness. This is preparation. If you want continuous updates as this situation unfolds, subscribe, hit the bell, and stay tuned. Because what happens next will affect oil, stocks, gold, crypto, and your financial future. Thanks for watching. I'm Felix, and we break down the truth so you stay ahead, not behind. Stay awake, stay aware. See you next time.